Alrighty, so hello everyone. Welcome back to another episode of Sesay's podcast, where we explore mindset, purpose, and success through meaningful conversations. Today, I'm actually joined by someone who truly embodies the spirit of real estate and master in mentorship. Right. So his name is Bryce Kander, and Bryce is a real estate investor. He's a mentor and founder of the Central Alberta Real Estate Network, and over his 16-year career, he sold more than 100 million worth of real estate and built an incredible community that has achieved over 70 million in transactions within just 14 events. So recently, Bryce actually celebrated on October 10th. Andrew kind of mentioned it that he now has 34 doors, right? So I think that's actually a milestone that's worth acknowledging and applauding. So Bryce, welcome to the show.
Thank you.
I'd love for you to just add to that and share a bit more about your journey and what drives you today.
Absolutely. I was thinking we should get your cool background back on.
Absolutely.
So yeah, thanks for having me. This is awesome that you're doing a podcast, and I know that people who watch are gonna learn lots because it's fun to see what you're doing. And it's like, yeah, you're continuing to build and you're continuing to grow even while you're growing in other areas too. So
absolutely.
Props off to you for starting.
So I guess we're gonna touch on early beginnings at first. So your first property purchase was when you're 13 years old, right? And what led to that? That's what I'm really curious about. What led to that, and how did how did those three risk options that you talked about, there was low risk, medium risk, and high risk, right? How did that shape your path?
Mm-hmm. I think by having like a mom who was in real estate and just growing up around it really helped because, yeah, I was 13 years old. My mom had this friend who was in the hospital, and this is why you always go and visit family when they're in the hospital because he's like, hey, my family never visits me. Can I leave my money to you? And my mom's like, well, no, I'm not your friend for your money. Can I leave it to your kids? He said, because my kids never visit me. And so he left us $30,000. And with that $30,000, 30 for me, 30 for my brother, mom laid out three options. And it was low risk, medium risk, and high risk. And we ended up picking, so low risk was we give it to the stockbroker, make 8 to 10%. Medium risk was we give it to my mom, and then she would go buy a property and she would give us 10%. And then the third risk, which was the high risk, was we would give half of the down payment. She would qualify for the mortgage, and then I would own 25%, Cole would own 25%. And because I was homeschooled, that was my class for the day.
Wow. That's amazing.
Yeah.
So essentially from a very young age, you kind of started learning about real estate, and your mom herself is into real estate, correct?
Yeah. Yeah, even one of my other classes, like we would bring the stockbroker in because it's like, okay, we're going to do our due diligence on the low risk.
Yeah.
And so she would bring a stockbroker in. It's like, here's all you can invest in coffee, or you can invest in tech. And it's like, oh, this is higher risk. It's 12%. Why is this one lower risk? So,
yeah. Awesome. So did that early experience that you had, did that teach you anything about risk taking or financial responsibility that still guides your decisions today? Did any of that?
Yeah, I remember so mom had rentals, and one of them was a terrible human being. He had 2 Rottweilers, and he would work in the oil field for a month at a time. And he would leave the dogs in the room with just a bag of dog food. And so eventually we went to go kick him out. But while he was gone, the dogs broke out and they crapped all over the house. They ate the couch. Like, it was disgusting. And we're in there, and this was my class for the day. She said, if we're going to be a landlord, you have to deal with crap like this. Like, the house smelled worse than the dump. Like, the dump smelled better.
Wow.
So yeah, it was like, okay, if you're going to be a landlord, it's not all cash flow.
No, most definitely. So let's fast forward some years here. So you've been a realtor for 16 years,
yeah.
Correct? And what major shifts have you seen in Alberta market over that time?
Yeah, right before I started, the year before I started, house prices jumped $100,000 basically overnight. Imagine buying a house for $200,000 and all of a sudden it's worth $300,000 next year. Wow. It's crazy. Especially if you put 5% down. It's like I put 10,000 down and I made $100,000. And so then that year was crazy busy. And then the cycle changed, and then it was really quiet. And it was really busy. So budgeting as a entrepreneur is tough, because it's like, if you get commission, it's like, whoa, you can make really large commissions, like $20,000 on one deal, but then you have to budget very, very well.
Wow. No, that's amazing. And I see that you were able to branch off into your expertise and actually create something profound, which is actually called the Central Alberta Real Estate Investor Network, right? And so what inspired you to start that? And what would be your proudest moments since launching it?
I hired someone to teach me how to do social media. And so this was actually part of my social media training. It was called How to Become an Icon. And so he said, you need to build a stage and stand on it.
Wow.
Yeah.
Awesome.
Yeah. So proudest moment, we just got nominated for the Emerging Business of the Year for 2025. We didn't win, but I got second.
No, that's amazing. That's so amazing.
Yeah, that's crazy.
Wow.
Yeah.
Okay, so you just recently got nominated, right? And okay, awesome. So now we're gonna touch it.
Finalist.
Wow, that's awesome. And so now, I guess for our audience, there's a lot of questions about real estate. Some people don't know how to start. So I guess someone that's experienced in real estate, that has so many properties, and he himself is a realtor. What's the easiest way for someone to get started in real estate investing today?
Reading. So my mom's got a book, Money People Deal is good, and you've probably read Rich Dad Poor Dad. So those three are really good. Listening to podcasts about it. Like I'm gonna be, come to the events. They're free. So if you're in Central Alberta, you can come every other Wednesday. How you learn is tough. Like I have courses that if people want to learn from me, but I had a tough time with that, because it's like,
I think it's just so broad, right? It's like there's just so many things, like so many ways and so many aspects of real estate.
And it's not guaranteed.
Yeah.
It's like, okay, I can learn how to flip a house and make $30,000, but then how do I find the house?
Yeah.
And what if it doesn't come up for a year? It's like, it's always been tough. So that's why I have like a money back guarantee. It's like you get the money back when you buy a property. So it's like you never lose any of your money. Because I know I'm so fortunate, because I had mom, like grew up with, like, she owns more houses than shoes. Yeah. Because she always said, no one will rent your shoes.
Yeah. No, absolutely. So now, say for example, now someone buys their first real estate investment. And so what would be the difference between owning one property versus 10?
There's a Bible verse: more sheep, more manure. So like Airbnb exposed the hotel industry. Yeah. I Airbnb 1 unit, or I Airbnb 42 units. Yeah. House, hotel. So when you're buying, this is why people like apartment buildings so much, is because if I have 10 units under one roof, or I have 10 single family houses with 10 roofs that I have to maintain. Yeah. It's way easier. It's more expensive to replace the apartment building roof, but it's not more expensive than replacing 10 roofs. Yeah, absolutely. It has its pros and cons depending how many you want. Okay. Yeah, I feel like, I don't know, I guess expansion, but there's still some things that you have to kind of, I think some people try to say, I'm going to try and get as much property as I can, but then they don't realize it takes management, and it takes a lot of carrying crap to the dump.
Exactly. So, okay, now what would be your favorite strategy in an appreciating market?
Appreciating market, it's the most advanced strategy. It's called BRRRR, B with 4 R's. And so to know how to do a BRRRR, you have to know how to flip, because the first R is renovate. And so whatever you do in a flip, you would do in a renovation. And then now that it's nice, new, and pretty, I rent it out. So our 27 unit building, we're doing a BRRRR on it. So we bought it for $2,075,000 for 27 units, which is $78,000 per unit. We're spending $1 million renovating it, and then our rents are going to be $400,000 for the whole building. And there's a strategy out there where if it brings in $400,000, it's worth $4 million. So that means it's worth $4 million when it's done. Yeah. We bought it for $2,075,000. We put $1 million into it. So we're in it for $3,075,000, and it's worth $4 million when we're done. And the bank will give you 80% of $4 million. Well, what's 80% of $4 million? 8, 16, 24, 32, $3.2 million. Wow. But I was only in it for $3,075,000. So I have all of my money out, and I have the building with 20% down.
Wow.
Obviously, there's holding costs in there. So it doesn't always work out where you get a free property. And then this strategy might be gone by the time some people listen, but you can get 5% down instead of 20% down. So instead of a $3.2 million mortgage, I could have a $3.8 million mortgage. And I was only in it for $3,075,000.
That's amazing. I remember when I came out to the property, it was in Innisfil, right? And I remember you guys were just looking at it. The investors were there. And so how's the construction going right now?
Good. Rock siding is going in on the exterior. And we just ordered cupboards for 5 units, 5 decks, and we ordered the patio doors because it's going to have all new patio doors and siding and windows and kitchens. And our first unit should be up and ready in January. So 100% empty right now.
Wow. So January is it's coming up pretty soon here.
Yeah.
That's amazing. Wow. I remember when I saw it like 2 months ago, basically abandoned, right? And I remember you showed me all these different areas. We checked, was it the downstairs? It was like the garage or something.
All the graffiti.
All the graffiti. And I was like, wow, what is going to happen? But now it's under construction and it's amazing. It's because I saw it, so I'm in amazement right now. So I would like to touch more on market insights, right? We all know that Toronto, Vancouver, those type of cities the rent prices are high. The market there is very expensive. So I guess someone that's more experienced, is Central Alberta becoming the new real estate hotspot? And if so, why?
Yeah, so Red Deer follows whatever happens in Toronto. So whatever happens there, a year later will hit Calgary. A year after that hits Red Deer. So house prices in Toronto went down. Calgary, they're going down. So I think next year it might go down a little bit. But people are moving back to Toronto because now it's affordable. And so then Toronto will go up, Calgary, and then here. So a lot of people were buying from BC, Ontario. They're buying here because Red Deer is the cash flow capital of Canada.
Yeah.
And it still kind of is. But let's say house prices go down. Well, we know that there will go back up. So it's called buy and hold. You just hold it. Then the mortgage gets paid down. That $2 million mortgage will eventually be zero, paid for by the tenants.
Yeah, absolutely. No, that's great. And I know I was watching one of your videos. You mentioned something about condo deconversion. And I was wondering if you could just let the audience know what is a condo deconversion and why might investors consider it?
I'm working on one right now.
Wow.
So 48 units. A condo deconversion is, well, we all know what a condo is. You own a little portion of a building, but you also own a little piece of the land. Now, if I own all of the whole building, I own all the land. And I also own all the voting rights. So then there's condo fees with a condo. So then I can hold a shareholder meeting and I own 100% of the company and I go, would we all like to get rid of condo fees? Yes. And so we collapsed the condo association. So this building we're buying, it has $400,000 worth of reserve fund. So the reserve fund is meant to replace the siding or something breaks. But if I own 100% of the company, when I collapse the condo association, I get that $400,000 right to my bank.
Yeah.
And so I made him an offer for $6.5 million. It needs a new sewer and it needs new roofs. It's about $1 million. So I'll be in it for $7.5 million. It could bring in $950,000 worth of rental income.
Wow.
Which means it's worth $9.5 million.
Wow.
And I bought it for $7.5.
Wow. And now that we're on, since we're touching on condos, I know that you made a $60,000 profit from buying a condo in Sylvan Lake without even seeing it. So what gave you the confidence to make that move? Let us know, because that's the next level of confidence.
Yeah. So I had been in the building, and it's right across from the lake. And Red Deer or Sylvan Lake changed the bylaws, and they said condos can now be Airbnb-able. So if you look at Banff and Canmore, what happened to house prices when you could Airbnb it?
Yeah.
Whoop.
Yeah.
So I just knew it was going to happen here. So that's why you look to Toronto and Vancouver, what's happening there, because it's going to happen here, what's happening in other cities. Whenever the city changes the rules, there's opportunity to make profit. And because Andrew, he was on the association for tourism in Sylvan Lake.
Yeah.
So he knew that it was going to happen. So he bought a condo ahead.
Yeah.
And he spent $10,000 renovating it, bought it for $138,000, put $10,000 into it. And then he called me after got his first booking. He said, "How much do you think I could get for it?" Like, $250,000. He bought it for $138,000, put 10 into it. Wow. And we put it on the market. It had 2 cash offers in the first day. And so then I called everyone else in that building because I'm like, they don't know the value of their condo.
Yeah.
And I called the realtors, and then the realtors messaged their sellers. So it's up to the realtors to do their own due diligence. I'm not going to tell them what I know. Like, they could pull up and see that this one's listed for $250,000. They could think I'm crazy for listing it this. Yeah. But yeah, we bought it for $158,000. It's funny, even the appraiser appraised it for $128,000. Wow. And then I sold it for $235,000 30 days later.
Wow. Wow. And you know, like, even me, I'm really into real estate, and I'm just starting my journey. And I know one thing that people oftentimes get caught up in is the different type of agreements, right? The different terms. So now I guess what I really want to ask is, why are long-term agreements often more beneficial in real estate?
Yeah, especially with commercial. Like residential, you get 6-month lease or a year lease, and then the tenant can choose to stay or move. But with commercial, you get a 5-year lease, sometimes a 10-year lease, sometimes a 100-year lease. And the value of commercial buildings, just like apartment buildings, is based on how much income it's going to bring in. Well, if I have a lease saying it's going to be 10 years of income, the bank will appraise it for higher. And so often you can get a lower lease rate, like pay $1,000 per month, if I sign a 10-year lease. But if I only want a 1-year lease, well, it's $2,000 per month, because they have to make their building worth more. Some people do 2-year leases with residential. It doesn't affect the value of your house, though.
Okay, awesome. And I know that we touched on what's the easiest way to get into real estate. Now, is there a fast way to get into real estate investing? What could that be? Yeah,
you call a realtor who understands it, and you just tell them that you want to buy an income property, and then because realtors have fiduciary duties, which means I have to treat you like I would treat me, which means I actually have to show you deals before I can buy them.
So you can't really hide deals, essentially.
Yeah. The 27-unit building I didn't find it. A builder found it, and he brought it to me, and he said, "Bryce, do you want to partner on this?" I was like, "Sure." Wow. But yeah, you can.
That's one of the questions I've always, thought about. Can real estate agents, can they essentially just hide properties and get all the good ones for themselves?
No. Yeah, legally they're not supposed to. I'm sure there's some bad characters out there, but they won't last.
Okay, and one thing I'm also interested in is seller financing. So can you break down what seller financing is and how someone can secure a seller financing deal?
Yeah, I bought a house for $1,000. I've bought a house for $5,000, and I've bought an apartment building for $10,000 using seller financing.
Wow. Okay, how does that look like? How does that process look like?
So actually, just a couple streets over, there was one for $1,000. The lady was offering it for $5,000, but it needed $4,000 worth of flooring. So I said, well, instead of $5,000, can I give you $1,000? She said, sure. The seller financing just means the seller is the bank. So instead of going to ATB, I go to Sesay. Yeah. And I say, hey, you have this condo. I'd like to buy it from you. I just can't buy it right now, but in 2 years, I'll make enough, and then I can buy it. And you go, well, in 2 years, it's probably worth more, so how much are you going to give me? I'll give you $220,000. It's worth $200,000 now. So would you take $20,000 more? You just have to wait 2 years for it.
Wow.
And so then I give you a deposit, just like the bank, and then I make you a monthly payment, and then title stays in your name. I just am the tenant. It's a rent to own. So seller financing, vendor take back, agreement for sale, lease back, equity take back, lease option, option to purchase. All of these words mean the same thing. The seller is playing banker.
Okay, awesome. Yeah, because people get caught up in all these different terms, right? So I know one time you touched on, there's so many different terms, but essentially it means the same thing.
Yeah.
Right. Every time someone makes something new, they add a new name, new term. So
yeah, and it's just a bridge. Like it's 2 years from now, I'm going to buy it from you, and so the seller will always ask, why? Why do you need seller financing? Well, I need 2 years because I got a raise and I have to show the bank 2 years of earning that amount.
Okay. Awesome. And I know there's a lot of, there's a lot of opinions around real estate. And so I guess one thing is, what is a real estate myth, right? You wish more people would stop believing, essentially.
Yeah. Vendor take back. So sell it back to seller financing. It used to be that if you had a house, you could lend me the down payment. So if it was an apartment building, it's like, okay, it's $1 million. I will buy it from you for $1 million, give you full price. I just need you to lend me the down payment. And it used to be that way. Like my lawyer has 100 doors because of that. But what happened is people were going around and they were getting all these free apartment buildings. It's like if I pay you $1 million, I get $800,000 from the bank. You lend me $200,000 and I pay you interest on that. I would go buy everything because they're free. I didn't put any of my money into it. And so people were getting in over their heads and going to foreclosure. And so the bank said, okay, no more of that.
Okay. And what do you think about the people that go into real estate and say, you know what, this is a get rich quick scheme? And, because when I talk to some people, it's just like, okay, I want to do real estate. I'm going to get rich. What are your thoughts about that?
Yeah. Real estate builds net worth. Businesses build cash flow. So yeah, you could do a deal and make $30,000 if it's a flip, but that's more of a business. And so it's like they describe it as active income or passive income. So active income is flipping, passive income is buy and hold, even though you still have to fix stuff. It's not completely passive. So it's not get rich. It's Rome wasn't built in a day. If I keep it for long enough, Red Deer averages a 7% appreciation over a 100-year span. So like, you know what compound interest is, but there's compound appreciation. So 7% and then 7% on my 7% and it just like explodes, especially if you're putting 5% down and it goes up by 7%. That's over 100% return on investment. It's just like ridiculous, but it just on paper, I can't get access to it. It just makes me feel good at night.
Awesome. So I guess now, what was the biggest risk that you took that paid off? Would it be this 27 unit building, or would it be something else that you did?
Probably asking out my wife. She's hot. She's out of my league, but it worked.
In regards to real estate.
Yeah, probably this apartment building. So I held an event explaining the deal before I even had it purchased.
Wow.
They had said yes, but I held an event. I'm like, yeah, here's the apartment building we're buying. Here's all the numbers. I don't even have an offer on it yet. But we got it 2 months later.
Wow. Yeah, that's amazing.
Yeah. And then hopefully this condo D conversion pays off. Like, that'd be crazy.
Awesome.
$2 million.
Awesome. All I've been getting right now is just knowledge after knowledge, and I really appreciate it. So now, I guess, if you lost everything today, right, but kept your knowledge, how would you rebuild from scratch? Tell us what that would look like.
I would keep posting on social media because I got a lot of money partners from posting on social media. I made one post and one guy invested $800,000.
The power of social media.
It is crazy. Like, I wish every business did social media.
So leverage social media.
Yeah. Post a day, a reel a day, a post a day. It's insane. Like, it quadrupled my business.
Wow. And would you say that post that you made, did it have that much, I guess, what about the post made someone just, was it just a random post? Were you expecting something out of it, or?
I was hoping.
You were hoping.
This guy, I'd been talking to him for a while, helping him, like, not getting paid, just giving him advice. And so then when he saw there was an opportunity to partner with me, he jumped on it.
Wow.
That's crazy. And then that's now brought me to, like, okay, you own a 27 unit apartment building. It's just this whole nother level of, like, my mentor said, icon status.
Wow. So Bryce, you have read 150 books, right? So out of the 150 books that you have read, what's one that truly changed your perspective and that you'd recommend to our listeners?
Well, obviously the Bible. So I remember I was baked one day and I was taking this challenge. It's called the World's Hardest Challenge. read the Bible 1 chapter a day for 30 days. And it took me 9 months to complete it, but I'm reading Deuteronomy chapter 28. It's 11 o'clock at night. I'm like baked. I'm like, oh crap, it's almost midnight. I got to go read my Bible. And so I'm reading Deuteronomy 28. It's talking about the blessings and cursings of following or not following God. And I'm like, come out and said to my friend, I'm like, do you think we're sinning by being high? He's like, yeah, probably. So I flushed my weed down the toilet, gave my life to Jesus. And like from that point, it's just the upward trajectory of like everything. Like it's crazy.
So the Bible is essentially like Jesus is the guiding force.
Yeah, yeah, because he's in you, and it's just like we're gonna partner with this guy to do a company together, and I'd given him a $3,000 deposit, and then my wife just felt that she was being guided by Jesus, the Holy Spirit, that we shouldn't do it, and so we decided not to. Had to give up the deposit. And then just yesterday, I had 2 people call me saying, hey, do you know anyone who knows this guy? He screwed up this deal and it's taken 6 months to recover. So if I was partnered with him, my reputation would be tarnished.
Yeah.
It's like reputation is awesome, everything.
Wow. And I guess what's one piece of advice you'd leave with our audience, especially those curious about taking the first step into real estate investing?
A lot of free resources on the internet. And if something sounds like, oh, like I bought a house when I was 13 years old. It's like, well, I didn't own the house in my name until I was 18 because legally you can't. And so people will say things like, I bought a house for $1,000. It's like, yeah, I did, but possession was 2 years later. And so it's just a bridge. So I had to have 20% down 2 years later. So you need a plan to get to that. So people will say, like, I bought a house for $1, I made $500,000. It's like, yeah, I did make $500,000 on this apartment building. Like, we're gonna make $500,000 on this apartment building. But my partners get the majority of that. They'll get $450,000 of it. So I didn't make $500,000, but we. And so when people say stuff, it's like, a lot of it is marketing. It's the hook. But yeah, we made $500,000 still. It's pretty cool.
No, that's so again, I'm very fascinated about the idea that you have 34 doors. So would you mind just touching a little bit about what your properties, like what's your catalog right now? What type of properties do you have?
So the first house when I was 13 is a single family house with a triple car garage. The garage is bigger than the house.
Wow.
Got 6 years left on that mortgage. Second house my dad bought for me. So he gave me the 5% down. He qualified for the mortgage. And then we did something called a purchase plus improvements. So the bank gives you $40,000 to renovate the house. So I added a basement suite to it. And so I got a free house there. And then I bought a lot. I don't have that anymore. I have a townhouse. So when my dad passed away, we had cash because he was a teacher and got a pension. And I did a BRRRR on a townhouse. So I only have $10,000 into it. And then I bought an apartment building, 7 units, and none of my own money. I raised the capital for it. I sold that one. And so I've got a suited property, my house that I live in, and then another suited property, townhouse, that single family house, and then the apartment building. Like 27 units takes up the 34.
Wow. No, that's amazing. It's absolutely fascinating how, you've had so much experience, but yet you just have so much property, right? I don't know how one does that, but is it just, do you think there's power also around the people that are within your circle, right? You are who you're surrounded by, right? So I think you're surrounded by a lot of good people that are like-minded, and I feel like that's taking you a lot of places. So that's why I also try to surround myself with people that I see myself in the shoes of, right? So what do you think, other than the Bible and Jesus, what else do you think really drives you? Like, what drives you?
Work, you find satisfaction doing work. And it's, people wonder like, oh, what's my purpose? Well, you have multiple purposes. You're eventually maybe going to want to be a dad or a husband. And so those are 2 different callings, 2 different purposes. And if you're working, you have a purpose there. If friends, it's part of purpose. So you have lots of purposes. Work is fun. Probably a little too addicted to my phone. Social media is fun, but
Does work feel like work, or do you find it more fun than work? Like, what's your thought on that in terms of this?
I was just showing a house to a friend. It's like, that's pretty fun. Like, you get to hang out with a friend and go show a house. Like, that's not work. That's like, I have the best job ever if this is work. So it depends. Like, some stuff you just do it because you have to. But then other stuff, it's like, it's fun. So, kind of.
Okay. So again, I'm just going to touch on the fastest way for someone to get into real estate investing is to reach out to a realtor. Is that what you said? Or read a lot of books?
Yeah. If you're not qualified, like if you don't have 5% down, then probably read, because there's very few people that understand seller financing. Your realtor probably doesn't know about it. They probably don't know how to write the contracts. So yeah, if you see the trigger like, oh, I'm gonna buy a house for $1, yeah, but good luck finding a realtor who's willing to do that for you.
Yeah.
So you need a job, basically, usually, unless you're really good at raising capital.
And I know that for your 27 unit building, you raised capital, right? And was that difficult? Like, how did you go about doing that?
It's always been a goal. So I've been planning for that with social media, because I knew that, okay, if I post about real estate investing, real estate investors will follow me. And then if I find a good enough deal, maybe they would partner. And it worked.
So you think how one goes about raising capital is leveraging social media? What else?
You need a 1-minute business plan, a 5-minute business plan, and a 30-minute business plan. Your 1-minute business plan is your elevator pitch. Your 5-minute business plan, it takes 5 minutes to read, and it's a little bit more detailed on the numbers. And then if you and I were going for coffee, it's what we would go through. And then your 30-minute business plan, you have, it's like this thick. And if I gave it to you and you started at point 1 and just followed the steps, you could do it without me. Now, most investors aren't going to see your 30-minute business plan, but they need to know that you know what's next, because you are the 30-minute business plan that they're buying into.
Wow, that's amazing. And I guess now, what is a mistake that you made in real estate that maybe you can tell us audience so that we don't make the same mistake?
I'm not sure it's a mistake, but it was a lesson I learned when raising capital. I was 24 years old, and I bought a 7-unit apartment building using none of my own money. Investor partnered with us. They gave us $100,000 down. We bought the property. We did a BRRRR on it. We bought it for $175,000. We put $100,000 into it, and I was thinking it was going to be worth $400,000. Rents tanked. Values are based on how much rent comes in. It only appraised for $330,000. I also didn't know that small towns require 40% as a down payment instead of 20%. So our investors' capital got stuck in the deal, but we had 3 exit plans. BRRRR, if that didn't work, flip it. So I put it on Realtor.ca to sell it. Now, how long do you think it took to sell?
I'm not sure.
It took 7 years.
7 years.
Yeah. And we had a 15-year mortgage, so there was actually 8 years left on the mortgage. How much profit do you think we made over those 7 or 8 or 9 years of me doing all the work, managing the thing, 0% vacancy, a waiting list of people wanting to rent it, rents were increasing? What do you think our profit was 9 years later?
I'm guessing somewhere low. I'm guessing something a little bit, not much.
Yeah, negative $12,000. And when you're raising someone's capital, even if you have to do all the work and you're not going to make any profit, you're actually going to lose money, you're basically married to that person, and you have to stick it through. So yeah, big lesson. 9 years worth of work.
Awesome. Okay. Thank you. So you've touched on a big lesson that you've learned. Now, what's a big lesson that you think that a lot of people learn going into real estate that you would like to tell our audience?
Being a realtor isn't easy. Just like starting any business. The real estate school will teach you how not to get sued, but it doesn't tell you how to sell real estate. So you have to study sales language, just like if you're a car salesman or something. Like if you study the sales language, it's going to make you better. Most people just skip that. Even when I was homeschooled, one of my classes was to study real estate language. I didn't do it. And then it took me 7 years to finally get it. So if I would have just studied it, I would have made a heck of a lot more.
But do you believe that everything happens for a reason?
Yeah, I was a stoner and then I got saved and then I started making more money.
No, most definitely. So we're closing up now, and is there any last words that you'd like to give to our audience in terms of advice? And then I'll kind of go for the outro here.
Everyone should become a social media expert because it's going to just take your business off, whether you're a plumber, carpenter, realtor, anything. You got to be posted on social media. And don't worry about the algorithm of hashtags or anything, because the words you talk about are the hashtags.
Awesome. I would just also like to put my own type of advice. I mean, not really advice, but my own experience with Bryce. You know, I think I first met you at, what was her name? It was Amanda's house. I think she was having some type of gathering, right, for a property. And Bryce was really open to me. You know, that was my first time attending the meetup. And it was amazing. You know, he took time to really talk to me about some real estate because I was very curious. So from fast forwarding from there, I started meeting him for his first 27 unit building. Then since he's the founder of the Central Alberta Real Estate Network, I attended some of his events and it's been amazing. And so I really want to just show appreciation for how open you are and how accepting you are to everyone, because it goes a long ways. Because then people think about you. You know, when I was starting my podcast, I was saying, you know, I have to invite Bryce because of his impact. Even though you do something small, it can go a long ways, right? So just having that conversation with me few months back really did have an impact. So I really appreciate it. So I just want to say again, Bryce, thank you for sharing your insights and experience. It's been an honor having you here. So before we close, please let our listeners know where they can find you, connect with your community and follow your work. We'll be sure to include the links to your profiles and to your Facebook, to your coaching site in the episode description. So please let us know where we can follow you.
Yeah, I'm on all the platforms, even Blue Sky. I probably haven't heard of that one.
Never heard of that. Blue Sky. Wow.
Yeah. Looking forward to meeting all of you guys.
Awesome. Thank you so much again, Bryce. I really appreciate it. It was a pleasure having you.